Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis on Wednesday, August 13, 2014. So what you're looking at here is a 60-minute chart of the SPY. And the reason I bring this up first tonight is because last night, if you go back to the video, I said there's a really good possibility today we'll have a nice up day in the market. And I said it could even be as high as maybe 15, 20 points, 15, 18 points on the SPY. Well, it was up about 12 and even a little bit higher throughout the day. But it wasn't a surprise to me, and there's a couple of reasons why. Number one is I talked about options expiration. I talked about the games that are played. And I talked about the fact that we had some economic data coming out, or data coming out this morning. And it was retail sales. But more importantly, yesterday, the 60-minute chart looked like this. Remember all that stuff I just said. Then take a look at the 60-minute chart. Okay, so this is from Tuesday. Okay, Tuesday, you have an up move, and then it basically put in a bear flag, right? An up move and then sideways to slightly down consolidation, okay? And what it really did was it came into this level here from where it broke out originally from the day before. And then it bounced up off that level. So what happened was, because we had this up move and this bear flag forming, that together with the options expiration, the fact that I talked about there's usually a decent up day in the middle of the week during options expiration. We had retail sales, even though that didn't factor in. They couldn't figure out why the market was up today. The retail sales were bad, and the market was up anyway. It was up before the open. It was up pre-market. It was up overnight. And so when retail sales came out, it was bad numbers, and they just couldn't figure out why the market was up, so they just ignored it all day. But so basically, what do I have in store for tomorrow? Well, if you look here, okay, we're going to take another crack at this, predicting day by day, which I don't normally do. It's kind of a fool's game, but here we go. We have another up move. That was today, okay? And then we formed another bull flag pattern, okay? And so, did I call this a bear flag before? It's a bull flag. If I did, I apologize. I don't remember. But this is a bull flag, right? It's a bull flag pattern. And then, so we started up at the end of the day today. And, if we have continuation, where do we go? So let's take a look. So the first stop, unless we open right up through this level, the first stop will be right here at about 195.62 or maybe 195.79, right at this pivot high here. Okay, this is that gap window that I always talk about, okay? That's first stop. But since the 200 period average, this is the 60-minute chart again, since the 200 hourly moving average is right above this pivot high level, you can expect to come into here if you make it up that high, okay? And it'll probably pierce this level. Now, let's go one step further. Since you would already be in this window here, okay, the chances of filling this gap go up greatly. So I'm not saying this will all happen in one day, but what I'm saying is it can happen. And if we get some type of bullish news in the morning that they want to rip the market up again, okay, then they can certainly rip it up, and they'll probably go all the way up to 197 on the SPY or 1970 on the S&P 500. So that's a possibility. I'm not saying this is a probability, but for tomorrow, this is certainly a possibility. It's not an 80% possibility, but it's a possibility. Is it a possibility to go up to this 200 period moving average on the hourly chart? Yeah, that's a higher probability for tomorrow, but this is a possibility. So we'll just keep that in mind. We'll see how it plays out. Let's just take a look at the daily chart, and we'll take another perspective of where we think things are going. So here's that same number. This is 197 up here. If we get up there tomorrow, I would suggest that on Friday you would see some kind of retracement. It may not be that much, but if we get up there tomorrow and finish strong, high at the end of the day, I would say that Friday would probably be ripe for some kind of a pullback, albeit it could be shallow. you're getting into the quiet period of August. You're getting into the dog days of summer. You're getting into the discussion about traders are on vacation, and there are a lot of people on vacation. You have the holiday weekend coming up, Labor Day weekend in a couple of weeks. And leading up to that, you may not, the volume will probably die out, and you may not have a lot of activity, and therefore they may be able to keep the markets relatively buoyant through that period, which would give us, get this, it would give us, let's just hypothetically say we get this up move into here. Okay, so there would be your A pattern, right, that we talk about. Then you would get a retracement. It could be even shallow. It could be for 2 weeks, like this sideways to slightly down, okay? And that could be your B pattern, your B leg. And then you can get one more move up, and you could challenge the highs or maybe make a new high. That could be a C leg. That's possible, but I'm not ready to call that just yet. I have to see what develops in terms of the pattern and you know, what the time and the price give us. But that's just where my mind is. I'm telling you what I'm thinking. And so I think what we're going to do right now is flip on over and move over to the gold chart. So let's pop that one up. And here we go. This is GLD. GLD basically did pretty much nothing today. GLD was up 21 cents. The price of gold was, you know, basically flat. And GDX was actually down 4 cents by the end of the day, but that's flat. That's nothing. Nothing new on gold. Nothing new on GDX. It's the same story. Time and price. We're waiting for time and price. Don't be surprised to see GLD come back in towards these moving averages as they move higher. And after we get some more, several more days of this kind of sideways movement, choppiness, if we're going to get it, then it will be ripe for a long play, but we're not there yet. So we'll see what happens. So not ready for a gold play yet. Oil, let's look at the USO. It was also flat today, but again, this is 6, so we're not taking a trade here. I don't have anything new to add to USO. I just have that, and I'm going to bring up the weekly. I like to do that with this chart because it very good picture of what I think is going to happen. So I would get interested if we broke down to this level here, or maybe even down in this area here, 34.5 to 35. Depending on how it gets there, we'll see what happens, and then I'll issue a trade alert to the members. I think, you know what, I'm going to actually give it a wrap there tonight. I don't really have anything new to add. Well, other than this, just if you want to get a glimpse on what's going on in the market, so let's get a feel for the inside baseball, inside the markets. So the S&P and the Dow are up right around 0.5%. Dow was up about 0.5%, S&P slightly more, and the NASDAQ was up about 1%. And what that tells you is that because the NASDAQ market contains more risky issues, more risky equities, okay, in terms of the beta to the market, which means they're more volatile to the market. So on the upside, they move up higher than the average, and on the downside, they move down faster than the average. So what happens is the fact that the NASDAQ market was up more than the S&P and Dow tells you that money was going towards risk assets, which means that even though we can tell from the charts, and let's go back to the SPY for a second, even though we can tell from the charts, that's a weekly, we're back in an uptrend for the time being, albeit it's probably a short-term uptrend, but it's still an uptrend. And that being the case, we want to be aware that you know, the characteristics have changed from when we went from here down to here. Now the characteristics are more like this stuff in here, where they'll look for excuses to send the market up, especially if there's light volume and it's in the dog days of summer. So you need to be aware that we're not really looking for downside right now that much. We may look for some individual equity plays on the short side, and we still have a couple of open, but we took half off the table on some of those. We actually have 3 open. We took half off the table on 2 of them, and you know, we'll see how it plays out. We guaranteed ourselves a winner on those. These are for the members, and but for right now, you know, you're probably better off with the long plays, and we issued one yesterday to the members, than the short plays. So that's kind of the mindset for the time being, and that can change. That can change day by day, but for now, for the foreseeable future, meaning the next several days or maybe even week or so, that's my take. And for there, we're going to leave it tonight. I'm David Frost, mystrategicforecast.com. This was another episode of Common Sense Market Analysis. Thanks for tuning in, folks.